be hosting. We're very happy to be hosting a session on affordable healthcare. Are MFIs being left behind? And with us today, we have some great speakers who are going to bring some deep insights. So they are all here for a different reason and bringing some particular points of view, but with decades of experience in the field on the issue of health and microinsurance and microfinance. We have Lisa Morgan, who is a health actuary who is working at ILO's Impact Insurance Facility and has done so for a number of years. And prior to that was at Millimans in London. Millimans is a global health actuarial consulting firm. And we also have Satara Merchant, who's currently CEO of the Swiss Capacity Building Facility based in Switzerland. But in addition to her current role, Satara has a huge amount of experience in the microfinance space, was involved with the SMART campaign, and also previously worked at the Aga Khan Development Network. So bringing a breadth of views and also understanding of how impact investors look at the microfinance space. And Richard Lefley, who is very well known in our inclusive insurance community, was in fact one of the founders, not just of microinsurance as a concept, but also a pioneer in our own network, the microinsurance network, and has a particularly interesting business model that is reaching literally millions and millions of people and works very actively both with MFIs and using some alternative business models to drive reaching scale and health cover, amongst other types of risk cover in many countries around the world. So we're very lucky to be able to hear from them and learn from their wisdom today. My name as your moderator today is Catherine Hovermacher. I'm the Executive Director of the Microinsurance Network based here in Luxembourg, and also Vice Chair of the Inclusive Finance Network in Luxembourg. So this session is being recorded, as you will have seen. We would ask you to put any questions into the Q&A, just use the chat for any technical issues you might be having. In terms of the flow of today's session, we have an hour. We are going to run a short poll, which perhaps someone could launch now, just to get a sense of which stakeholder groups are represented in the room. And that's so that we can target our conversation to meet your interest and level more accurately. Then we're going to have about 30 minutes as the panel discussion proper, and we've allowed 15 minutes for a Q&A with you. Please do use that opportunity. I can assure you that we are all quite talkative people and we can fill the space, but we'd also like to leave some room for you to have voice and ask questions and take advantage of the know-how and expertise that is in our virtual session today. So without further ado, while that poll is running, we'll flash up the results once they're in. But meanwhile, can I ask you, I'm going to go around the group and ask everyone these questions, but starting with Lisa, could you tell me, I mean, in your opinion, why should MFIs even think about health? I mean, micro credit life insurance maybe, but why health?
Thank you, Catherine, for that fantastic introduction. Actually, in answering this question, I'd like to just invite, if anyone on this call is particularly interested in the subject, I'm not going to be able to do it justice in a few minutes. I actually wrote a paper with my colleague Craig Churchill on this very topic, health and financial inclusion. So I think, Asia, if you could just pop it in the chat, there's a paper and also a 2-page case brief that it starts out by answering this very question. And I think very briefly, my answer would be that when MFIs consider the health of their clients, there's a triple win that can happen. So the MFIs, if there's such a link between wealth and health, as I'm sure many of you have thought about. If you are healthy, you can work, you can be productive. So, if MFIs can keep their clients healthy, then it's good ultimately for their business. And individuals, so really the three groups that I'd like to just for us to think about. You've got the MFIs, you've got the clients, the individuals, and you've got society as a whole. So the MFIs, it's good for business if your clients are healthy and they can continue to repay their loans. For individuals, when we do our surveys in low-income populations, it doesn't matter where we are. Typically, health comes out as the highest in-demand risk that people want cover for. So there is a client need. Many clients have a lack of knowledge about health. They don't know how to access care or what to do about preventative care. They're unable to afford medicines, cost of care, even the incidentals, the non-direct costs around healthcare. And when it comes to the loans themselves, clients may worry that they can't repay their loans if they are sick. And then another thing is, having access to public healthcare services is something that many low-income people need. So that's the individual. Then the third bucket. So from a societal point of view, SDG 17 is the Sustainable Development Goal on partnerships for the goals. And, MFIs have got huge reach into these low-income populations around the world. And so by partnering to achieve the SDG on health, I think, there's a societal benefit that would help the goals, because we know that even before the pandemic hit, the WHO estimates that 100 million people are pushed into extreme poverty by catastrophic health expenses every year. And this number is probably even higher now with COVID. So I think those three are the sort of the key groups of people that I'd like to focus on. And I think, MFIs can benefit, have that triple win. So with that, Catherine, let's hear what the other speakers have to say. Maybe one of the others would like to jump in.
Sure. So Tara, what are your thoughts?
I couldn't agree more with what Lisa has just said. I think what's interesting, though, is before the pandemic, I think people were less focused on health. I think that it's really brought about the limitations that health brings about. I think the point that you talked about, Lisa, which is really, how the health of a client is linked to their financial. I mean, we saw that in COVID. We saw it very clearly. And if anything, sort of put it out there in a more intentional way, it did that. And I think that, so I think more and more microfinance institutions will be thinking about how to actually provide healthcare, whether it's partnering, like you said, with private sector, particularly, that's where our interest is always. But I'd be interested to hear from Richard, what your experience has been over the last few years. I mean, you've been in this, you're long in the teeth, as they say, in this field. So what are your views?
I mean, I think, we have seen microfinance organizations introducing health insurance because it's one of the risks that people face. And frankly, it's one of the risks that causes people to struggle to repay their loan. If they get an unexpected bill from themselves or one of their family members, health is probably one of the top three kind of reasons, why someone would get a sizable bill that they weren't expecting. And therefore they really will struggle to repay their loan. And so it becomes very much a focus in those countries where repayment of the loan is an issue. And we've certainly seen it be popular amongst the microfinance organizations to include it as part of the credit life package.
Yeah, that's so true. I mean, so such a huge percentage of medical expenses in developing countries are paid out of pockets. So I mean, there are some good reasons for MFIs to think about health, but are these MFIs, Lisa, in your experience, are MFIs who offer health insurance the exception or the rule?
In my opinion, and I have not gone out and done a survey of, all the MFIs in the world, but I would say that it's more of an exception than the rule. And I did actually go back and look at the paper that I did, just because I remembered that I'd actually done some research on that when I wrote it. And there was a paper that that studied 89 different MFIs who offered some kind of health intervention. And of these 89, only 20% offered health insurance. So your question is specific to health insurance. Like, yeah, not that many were in this particular study were offering health insurance, but 80% were offering things like health education, group-based health education sessions, referrals to healthcare facilities, counseling. Some of them had organized these contracts with different networks of public and private healthcare providers, and also were involved in some kind of healthcare promotional events. And just to say from that study, which I'll just mention, it was by Leatherman and Dunford and a couple of other authors. Those 89 MFIs were spread across the world. So it wasn't just like one geographic region, it was pretty much quite evenly spread. But some of them also mentioned that they were offering other healthcare services like facilitating access to affordable medicine, healthcare vouchers, supporting projects around community water and sanitation, and obviously mobile services like telemedicine, which has obviously become popular. So that study is probably a little bit outdated, I would say, but it does give some indication that, you know, health insurance is not, I doubt it's jumped from 20% to 50%, say. So I would say it's probably the exception rather than the norm.
Right, and yeah, I mean, certainly with the results of our landscape study that we launched a couple of weeks ago, that does show that the demand for some kind of health insurance, not only from MFI clients, that's the fastest growing area of inclusive insurance based on the countries that we cover. And of course, a lot of that is hospital cash, but we'll come back to that point later. I'd like to hear from you, Richard, because you've got quite a different perspective on this.
Yeah, it's funny. I mean, I think, you know, when we look at the mass market, when we look at the, you know, those that are excluded from insurance, I mean, typically they're worried about the bad things that could happen to them, right? So I could have an accident, I could die ultimately. I mean, I might have to go to hospital. And they're also worried about the, you know, damage to their kind of belongings. So if my business gets affected or my home gets affected, or quite often and increasingly, if my phone is damaged, because my phone is really important to my business. You know, if I'm using it to contact clients or deliver food or find someone as a taxi. So those are the things that people worry about. And when you think about the classic kind of approach that microfinance organizations have taken, they've tended to kind of like cover off those risks by default, right? So, you know, it's very common for there to be credit life insurance, for example, and then it's quite common for that to be extended to include accidents. You know, so it's only a natural extension that would then kind of be extended further to then also include health, because that's, you know, I mean, I've heard many clients say to me, you know, I only die once, but I go to the doctor many times. So of course I want health insurance. It's the one product I want because I'm going to use it, right? And I, you know, when I die, I'm gone. That's someone else's problem. So, you know, in many ways, I think, you know, microfinance clients understand that they need to have credit life insurance, but it's really there to benefit the lender to some extent. I mean, if we're being honest, it's there to kind of protect the lender in case the borrower dies. But health insurance can be used in both ways. It can be used to actually give benefit to the person whilst they're alive. It's a living benefit, but it also can be used to benefit the microfinance organization to help pay for the loan in cases where the person has spent all their money instead of repaying the loan on a hospital bill. So it's definitely a way to do it. I mean, I'd love to share with you at some point, Catherine, around how that's evolved and how these kind of products have evolved within microfinance organizations, but maybe be great to hear from Sitara as well.
I tend to, thank you, Richard. I tend to agree. I mean, there are exceptions, microfinance institutions that provide health insurance. I think the crux of the issue is really what is the sort of ideal model? Is there something out there that actually meets the needs of the clients, or is it that you know, the government is expected to pay for insurance, and so are people waiting? I mean, those are the questions I think we need to be asking to really understand what's the driver behind microfinance institutions being exceptional if they provide health insurance.
Sure. I mean, can I jump in on that, Catherine? Is that okay?
Of course.
Yeah. So, I mean, I actually think, Star, it's a really great question. I mean, I'm fortunate. I live in a country where the government does provide healthcare as part of the taxation system, and I'm a huge fan of that. And I think that actually the right outcome is that everyone in the world should have, health as a universal right provided centrally from the government. That's not the reality we see on the ground today, unfortunately. And so kind of in the meantime, whilst we wait for that kind of ultimate outcome in terms of universal healthcare to be delivered, then I think there is a role for the private sector. And I think there's a huge role for microfinance within that, because microfinance organizations are trusted by the community. People already rely upon them for financial services. And so it's a very natural extension to go beyond the loan into savings accounts, into insurance, into other ways of protecting people. I mean, my experience over the last 20 years is that health insurance really first started showing up at microfinance organizations probably in about 2006, 2007 in India, possibly a little bit before that as well, especially in some of the kind of mutuals that were working kind of prior to that. So there is definitely a kind of longer history. But the mainstream microfinance organizations, the ones that we know about, they started to offer a kind of almost a downsized version of traditional insurance. So this was where, this was the kind of insurance which was for hospitalization. You got an ID card. There needed to be some kind of what was called a third-party administrator who would maintain a list of hospitals and negotiate with those hospitals for services to be offered. And then as a microfinance client, you would pay for your insurance through your microfinance loan, and you would take your ID card to a list of hospitals, and then you were supposed to receive cashless treatment. These products largely failed because it was very hard to create a network of hospitals in the locations where the clients were. These networks of hospitals existed in the capital city for rich people, but they weren't the right hospitals for the kind of microfinance borrowers, and they certainly weren't in the right places for where the microfinance borrowers were. The hospitals also didn't want to kind of fund the healthcare and pay for the services and then try and recover the cost from the insurance companies. And so they started to demand very quickly that the microfinance client just pay the bill and then, go to the insurance company themselves and get recompense. So the cashless element of it fell apart quite quickly. A number of other models were then tried. So things like, capitation models where this was focused on outpatient treatment, where you paid a kind of an upfront fee, and then you gained access for outpatient for as much treatment as you possibly could need in the course of a year.
Richard, just to break in, just mindful that some of our audience might not have an insurance background. Can you explain what a capitation
Sure.
model is?
So capitation is where you basically you look at the history, you look at the data for a clinic. So you look at a specific clinic and you say, okay, what is the average cost of treating a person in the community over the course of a year? So if we had 100 people in the community who came to the clinic for outpatient treatment, you would look at all the treatment that they'd paid for over the course of a year, and you'd work out that on average, each one of these people needed to contribute, say, $20 or $25, and that would have covered the average person amongst those 100 people, their medical bills for a year. And so then you present that to the customer and say, would you like to prepay $20 up front? And then whenever you get sick, you can come here. You don't have to find the cash. You can just come unlimited a number of times. Some of you will use less than $20. Some of you will use more, but amongst all of you, 100 people, it will roughly work out as $20. That's basically, it's a little bit more complicated than that, but that's in essence a capitation model. Lisa's probably grinning because she's an actual real life actuary and probably is my definition's a little bit, basic. Let's put it like that. But that's it. Lisa, that's it in essence, right? So
yeah, that's sufficient. I think it's just to say that the healthcare provider takes the risk. So capitation is sometimes used by governments actually for outpatient cover, because administration of all those little bills can be quite heavy. So sometimes you have it in a public healthcare setting where you have a capitation model where the government will give per person in the population a certain amount to the healthcare provider. And if the healthcare provider has to see more people, then they'll end up paying essentially for that, or they take on the risk of whether it's too much or too little.
Yeah, absolutely.
So
absolutely,
even in the NHS,
Yeah, exactly.
You
can put a stop loss on there, but yeah, that's way too much detail for this session.
Yeah.
So the model that we've kind of ended up with in the microinsurance industry, not just as it relates to microfinance, but more broadly, is the most popular model that we've ended up with is this product which we call hospital cash. This is basically different to the other products that we've been talking about. It is an inpatient product, so this is only for if you need to be hospitalized. Generally, it works without a list of hospitals, so you can go to any hospital you like. So this allows the client to choose which hospital they prefer to go to. And the way that it works is that you go to the hospital. If you're admitted to the hospital for, say, 2 nights or more, so whether you're there for 2 nights or 3 nights or more than 2 nights, then that triggers a payment, and the payment is just a fixed sum of money. It doesn't relate to the cost of treatment. So if you are lucky enough to have other kind of health insurance, or if maybe the bill is paid for by friends and family, then this money can be used for loss of earnings, because most people in the informal sector, if you're not working, you're not earning, and therefore it can be used, the payout can be used to pay for your medical bill, but it isn't related to your medical bill. It's just some money which comes to you as a result of being hospitalized that you can use to either pay the medical bill or to pay other kind of costs. And of course, what that enables you to do when in a microfinance setting is to direct that payment perhaps towards a loan repayment. So if someone is hospitalized, then some of that money can be used to pay for one loan installment or 2 loan installments, or it can be split between the microfinance organization for loan installments, and some of it can be given to the family for other kinds of incidental expenses like paying the rent. So it's quite a flexible product in that way. It's a very simple product to understand, generally costs or can cost around about 70 cents per month per person upwards. It's that kind of a product.
So Lisa, I know that you've been chairing our health insurance working group over the last couple of years, and you, with the members of the group and also in your day job, you've done a lot of analysis of health insurance products, and specifically around hospital cash. So I think you might have some interesting insights into the different types of health microinsurance products that are offered, and also perhaps some comments. And Satara, I'd like you to comment on this afterwards as well, is how useful is hospital cash in a context, perhaps a normal context where going to hospital might be something like an unusual event, and how useful is it in our current context where, first of all, hospitals might not be available, right? Or people might not want to go to hospital because they're worried about catching COVID. And second of all, in the context where, with rolling out universal access to healthcare, part of the emphasis has certainly, there's been a very large emphasis on primary care and clinics that are easy for people to reach. So that was a very long question. I hope you got all of that. So first Lisa, and then perhaps Satara, if you could comment on that.
Right, thanks, Catherine. So I think Richard actually answered some of that, did a great job in kind of answering some of that question. So, hospital cash is a great product. And, as Richard was saying, there was a bit of an evolution of the different types of health products. And over time, where we've landed is, not on a comprehensive product. We've landed on hospital cash as the product that has kind of been this happy equilibrium between something that is offering enough client value, but also sustainable from a business point of view. And I think, speaking from a health actuarial point of view, hospital cash is a much easier product to price. So, as Richard was saying, it's not an indemnity product. It's a product that provides a lump sum, a predefined lump sum for every night that you spend in hospital from the second night onwards. And I've seen it also as per hospital episode. And so, the actuaries really just have to focus on that incidence rate of how frequently do people go to hospital. And so there's a lot less kind of risk in pricing that product. And so I think, if I compare it to like a comprehensive plan where you really need to know the incidence rate for all the benefits that you might offer, this is a very simple health plan. And I think you can get it to be, because you can scale up or down that fixed amount, you can make it much cheaper, because if you link it to the cost of care, it very quickly becomes quite unaffordable. So I think maybe now is a good time for me just to share the one slide that I wanted to show you. So hopefully, you see it?
We
Yes.
can.
Okay, great. So again, in the paper, what we studied was that if you try and offer comprehensive cover in a microinsurance setting, and here I'm talking about like a full inpatient, outpatient, like what you would imagine from a very high-end type of product, it's extremely difficult to make this cheap without subsidy. And so we've seen many of these, even when they're trying to kind of package just a limited number of inpatient and outpatient events, especially where it's voluntary, you have such high problems of anti-selection. And this is an insurance term. It means that if you're sick, you'll buy the insurance. As soon as you've used the insurance, you will drop your policy. And what happens is, because in the assumptions most of the time it's assumed that you will have a mix of healthy and sick people, so that the healthy people subsidize the sick people, it very quickly can spiral out of control. So where you can make the insurance mandatory, like making it mandatory for every member of every client of the MFI, then you don't have that problem. But having a voluntary product is, if it's so comprehensive, can be quite dangerous. So in the paper that we put together, we took this approach that offering a holistic solution where you're thinking about how you can possibly still cover all the risks and look at things like preventative care is probably a great approach to take. So if you are an MFI and you're thinking, I want to meet the health needs of my clients, you can consider putting together a package of benefits. And this puzzle, which I know it's not as great as the artwork behind Richard, but I think I need to get his artist to help me redesign this puzzle. But this kind of shows you the universe of things that you can think about with health services and in health insurance. So, to get that comprehensive cover, you could actually help enroll people into your universal health coverage scheme if in your country this exists or is being developed. So, an example is CARD in Philippines. They were helping enroll people into full health. Also, you've got Intiba in Kenya, where PharmAccess was trialing how to enroll their members into the NHIF in Kenya. So bundling that alongside a simple hospital cash, which is really acting like some kind of income protection or out-of-pocket expenses, thinking about how you can put that alongside a health loan. That loan could even cover the premium, I think, as Richard was saying, and a health savings wallet, which you could lock specifically just for healthcare. And then value-added services, which is really important when you are an insurer, to think about what tangible benefits you can give people if they don't claim. So for example, telemedicine or health tips, these are things that you would get anyway as being a client, whether you claim or not. And it makes the product really tangible. And I've always maintained that value-added services you could include that in your MFI offering even without the insurance. So, this is the range of things that you can think about. In addition to this, what we see is credit health, which might have been mentioned. So this is where the payout just covers the loan repayment if you go into hospital. There are also things like chronic illness, where maybe for, again, a limited group of illnesses, if you get a diagnosis of one of these, then you get a payout. I've also seen lump sum payouts for diagnosis of particular disease or a set of diseases, like, for example, Pioneer's Medicash dengue insurance in the Philippines, where if you get dengue fever, you get a payout. And that was quite a nice, quite innovative product, because it wasn't the usual cancer, stroke, the chronic, it was, responding to a very relevant need where people were suffering from more dengue than had been in the past because of climate change. So that was a really cool, I thought, innovative product. I've also seen personal accident and sickness policies. And when I did some work in China, there were also some very simple policies that paid out on, for example, dog bites or snake bites. So really, you can structure it to be quite specific.
So Lisa, just, I mean, I'm just aware of time, and these are some really great ideas. But one thing that intrigues me is, research that we've done at the Microinsurance Network shows that, it's far from the norm that all MFIs even offer credit life. So the subset that offers some form of health insurance and healthcare services is likely to be even smaller. So I think these are great ideas to encourage, the types of offer that could be made available. But I wonder, Sitara, you've got a deep background with MFIs. In your experience, is it common for MFIs to go this far, or is this really the best of breed microfinance institution that is likely to offer these kind of add-ons? And are there any patterns in terms of, are these tier 1 MFIs the larger ones, or is it smaller, more community-based ones? What are your thoughts on that, Sitara?
Where I see sort of the insurance going is really centered around partnerships with private sector. So particularly in India, India's done made a lot of progress on insurance, especially health insurance. And what they've done is really partnered with large organizations that are for profit and been able to push them to go down market. And this this links to the gap in the SDGs. We have a huge gap in the SDGs, and we don't have the funding at any level, whether it's at the microfinance level. Earlier Lisa talked about those 3 levels. There just isn't the funding there. And I think we've really got to start pulling and pushing the private sector to come and partner with the MFIs. We all know that the MFIs are well placed because they're in the communities, and they have access to the rural and lower income populations, and so they are ideal. But really having that partnership, and I think there's a lot of progress that's been made. And so what we're seeing actually in India, some of the projects that we're starting to fund is, that partnership with the private sector and how they're coming together to actually put a product onto the market.
So do you have any concrete examples of, what does that actually look like? When you say the private sector, is this a Philips or a Siemens providing some funding to make this happen?
Oh, no,
community health center, or?
Okay. No, it's actually insurance companies. So in India, you've got off-the-shelf products that are catered to lower income populations that you can have access to. There's also partnerships with telcos or with insurtechs rather, that are providing some of this insurance as well. So, and what they've done is they've gone to a private insurance provider and said, we want to push this down market. And one of the things that Swiss Capacity Building Facility does is funds these innovations. And many of these, whether it's, the large insurance companies, they need some funding to de-risk a product that they want to launch on the market. And so we actually facilitate that and have them test these products in the market with a view to actually achieve scale.
Great. And Richard, you've mentioned previously, not in this chat, but in other conversations, that you have MFIs actually approaching you to offer, they want health or credit health insurance. So I wonder, what are the defining characteristics of those MFIs? Why are they doing it, and what sets them apart?
Sure. I think it's kind of interesting because I was really surprised. I remember, when Lisa mentioned, that it was the exception rather than the rule. And that really surprised me because many of the markets that we work in, I don't disagree with her, by the way, kind of globally. I'm sure she's right. But many of the markets that we work in, so countries like Ghana, countries like Kenya, countries like Pakistan, it feels like there's a lot of competition amongst the microfinance organizations. These are very kind of they're very competitive markets. If you're a microfinance company, you've got there are a lot of other people that are offering similar services, and so they are always looking for something to try and differentiate themselves, right? So they don't want to just compete on reducing the interest rate or increasing the size of the loan, because those things aren't necessarily in their best interest as a microfinance organization. So offering other services which people see value in, which then encourages people to take a loan from them rather than from their competitor, seems to be one of the key drivers for introducing these insurance products in these markets. So certainly the countries that we're in, where there's very competitive markets, we've seen most of the large MFIs adopt this as part of what, kind of part of the credit life. It's embedded into the loan, and then the most progressive ones are actually offering the product as a standalone, so that once the loan is finished, you can opt to continue with your health insurance, either by taking a very small loan to pay the premiums or just paying them as you go.
Very interesting. So one feature that impact investors looking to have an impact through the MFIs on the health outcomes might consider is how competitive is the microfinance sector in that particular country, right? So driving competition, it creates this incentive to provide better services, which is what you would expect. It's common sense, but it's true for the sort of social outcomes, the triple bottom line, as much as anything else. And I wonder, Lisa and Sitara, you've also got experience from the investment side. So we tried to, in putting this panel together, we tried to find examples of impact investors who actually used offering some kind of health service as a criteria for investment. But as you know, we struggled. But I know that you've both done some background research on this. And so my question to you both is, how are impact investors helping to drive health outcomes at their investee MFIs?
So shall I have a crack at that? And then Sitara, you can go for it.
Sure.
So actually, yeah, I mean, Catherine, it's a really interesting question because I have done some research and I've spoken to my team. We have a sustainable investing team, and it seemed to be the answer that investors who are interested in achieving health outcomes are likely to focus more on healthcare providers, telehealth, pharmacies, and healthcare innovations, rather than kind of going through MFIs. So it was. I mean, I could find quite a lot of examples of impact investors going directly for the healthcare providers. So, for example, like Leapfrog. Well, sorry, Leapfrog does have some investment in healthcare providers, but one I found was like Bamboo, that was investing in Vatsalya, and I'm sorry, I've pronounced that incorrectly, in India, which is a network of healthcare providers in rural Karnataka. And then also, so like examples of investing in healthcare providers, and then also in investing in sort of health insurance. So like Leapfrog investing in Bima. But when it comes to investing in MFIs, it seems like the focus is more on the core business of what MFIs do, and health is not really a core business of the MFI. However, having said that, I also found that through the GIN, the Global Impact Investing Network, there are many, many, many tools that you can use to focus on health as an outcome within whichever type of organization you are. So, I would say that if you are interested, if you are an impact investor on this call and you go to the GIN and you look for this tool called Iris Plus, you can find all sorts of ways of measuring the health outcomes of your investee organizations. It's quite generic, but there are some really good tools. But the other thing I would just say before I pass it over to Sitara is that most of the measurements kind of focus in on healthcare usage. So how many, the question, how many times have people gone to the hospital? How many hospitals are there? That kind of thing, rather than healthcare outcomes. And I think that's a really interesting space, that maybe we need more work there. But I think going forward, this is an area, we could maybe also encourage impact investors who are investing in MFIs to also consider the social part of their social, environmental, and economic piece as health. Why not? So Sitara, over to you.
Thanks, Lisa. I think, if you look traditionally at impact investors and you look at the reports on different types of impact investors and they look at microfinance, and what you'll see is generally they talk about housing, energy, agriculture, and then there's this category of other. And so traditionally that's what they've looked at because they are in these communities. I think there's also the fact that there isn't something other than hospital cash, there isn't something out there that really makes it tangible for them to push. I think there is an impetus to start looking at it more. but they haven't traditionally for various different reasons. And I think if you look at, sort of the spectrum of investments, even though the investors that would be willing to support this sort of insurance, health insurance, that's not beyond hospital cash and trying new things, are more on the philanthropic side or the catalytic fund side, as opposed to on the sort of right-hand side, which is more the impact investors or the development finance institutions, and more those that are looking for scale and return on investment. But Richard, I mean, you must have some experience in this in terms of your building your organization. How was your experience? I don't know if we have time, Catherine.
We do. Before Richard answers, let me encourage our attendees, do please, if you have any questions, pop them into the Q&A. And if there are any questions in there when Richard has finished his answer, we'll address those. Otherwise, we'll continue the discussion. So if you have a question that you want answered, seize the day, put the question into the Q&A, and we'll do our best to answer it. Otherwise, back to you, Richard.
Sure. So, Tara, I mean, we over the course of the last 20 years, we've raised probably about $200 million from a range of different, organizations, everything from grants, from people like the Bill and Melinda Gates Foundation, all the way through investments from, social investors like Midyar or IFC, all the way through to investments from telcos and insurance companies. I mean, I think each one of them are looking for something quite different. The grants, typically they're looking for impact and scale, or specific answers to questions that are important to them as a donor, such as, is there a business case for insurance? What's the client value from insurance? The social investors are looking for scale and impact, and unfortunately the financial investors are largely looking for return, and each one of those has a role to play in the kind of development of the organization. As you need to unlock larger sums of money, of course, you end up kind of inevitably going from grants to social investors to perhaps full strategic investors that are looking for a return on their money. And each one of those has a role to play in the development of the organization, and I think also in the development of health as it relates to microfinance. Although I think clearly, going back to Lisa's point, which is that this is still fairly nascent, 20, 30, 40% of microfinance organizations have some kind of health. I think there's a huge role for the donor community in trying to work out, are these the models? Are these the right products? And I think the discussion that we've had so far has been the right discussion, which is these are products, the products that we have are on balance sustainable operationally. They are, products that you can roll out, they will work, but they definitely are the bottom rung on the ladder in terms of impact. So there's definitely more impact that we could have in the health space. We haven't done that yet, and perhaps that's an area that, as an industry, not just not talking as an individual, but as an industry, we haven't done that, and perhaps that's something that the donor community might be interested in.
And it's interesting because I think, Lisa, you touched on this, and Richard, you've touched on it as well. I mean, you were talking about MFIs being used to enroll their clients into the UHC schemes, the national schemes, right? And I mean, you and I, about almost exactly a year ago, we were presenting on, remember that health conference in Egypt? I mean, virtually, obviously. And they were trying to figure out how to reach people in the informal sector, especially women. And, I wonder if that in itself is a function that MFIs could perform along with, I wonder how widespread that is. Is that something that...
Yeah, I mean, it's absolutely such an opportunity that I feel hasn't been, we haven't even touched the tip of the iceberg of really making that opportunity a reality, because really I think getting MFIs involved in enrollment into UHC schemes could be so powerful. Like even in my experience of working with the NHIF, so this is the UHC scheme in Kenya, whereby if you are in the informal sector, you essentially buy what's called super cover, and yeah, they actually at the NHI, they have an informal sector strategy, a department, a team that's looking at that, and they're very engaged with how do we work with banks? How do we get these aggregators together to help us sell the super cover? Because you still have to pay, you know, this is something that you still have to pay for. So I think, yeah, I think there's a huge role that MFIs could play in this, and it obviously depends on the country, and it depends on the type of UHC that is in that country, because if the country is wealthy enough to have more of a tax-based system where you just need an ID card, then obviously maybe there's less of a role. But I think where you have to distribute the public health insurance almost as a very highly subsidized insurance product, that's where MFIs can really help. Was there another question? Or I think
no, I think that's it. I mean, in terms of the question that I was asking, and you know, we presented it in Microfinance Week. We had some case studies of MFIs that are offering. We didn't just look at health insurance, but we were looking at beyond credit life, right? So what are they offering? And there were some really interesting examples where the MFIs had gone out, done customer research, that they'd actually asked their customers what they wanted. And the one that always sticks in my mind, it was quite a small MFI, I think it was in like Honduras or Nicaragua or somewhere in Central. Their clients had said, the men said that they wanted personal accident insurance, and the women wanted a screening for breast cancer, right? Yeah. So I mean, I think there are, you know, there's a couple of lessons there. What was very different in the country concerned was that the government, the central bank, or whoever the regulator was for the MFIs in that particular country, if they offered insurance, the amount of risk capital that they needed to have available was lower. So it was offset against that, which I think provides a very direct incentive for MFIs in countries where that's possible.
Yeah, absolutely. And just to jump on that point, so many of the projects that we work on at the moment, we have a very strong sort of hard agenda focus. Now, how do we make sure that these products actually get to women? Because there is a gender protection gap. And a lot of the time, the answers we get back from people who apply to work with us is we're going to focus on MFIs that cater to women, because we know then we're going to be able to serve women because they are the main customers. So actually, I think there is another opportunity there, you know, not just thinking about UHC, but also thinking about it from a gender aspect and thinking about the type of clients that MFIs that serve women have. These are entrepreneurs with small enterprises, micro, small, medium enterprises. So, you know, absolutely insurance lowers the risk and can possibly give you a higher loan, which means you can do more with your business. And so, you know, you can get this virtuous cycle, you know, in theory, that I think helps everyone. So, yeah, I think from a gender perspective, you know, I think more MFIs. Another point I wanted to make was that, you know, it's ironic that microinsurance really kind of started off the back of microfinance. And, you know, maybe that opportunity hasn't been fully exploited because, or exploited is the wrong word, but fully utilized, because we could be using, I think, MFIs to not just for credit health, but I mean, credit life, but for all these other products that are health related. And I don't know who needs to be more proactive here, but perhaps we all need to be more proactive in coming together and discussing what can be done.
Yeah, I'm all for everybody being more proactive, because if we all take action, then something is bound to happen. And I think when nothing happens, it's sort of this bystander apathy that we're waiting for someone else to take the initiative and be proactive. So, I mean, you know, but any thoughts on what we've just been talking about before we wrap up? We've got about 5 minutes left of the session, I think. Is that right? Yes. So before we go on to our calls to action, which I think is where we wanted to end up, sort of any more thoughts on, you know, how we could more effectively engage with MFIs, probably in specific countries, to capitalize and accelerate these types of partnerships. Satara, maybe you, and then Richard.
I think you know, making available, as I mentioned earlier, making available that sort of initial capital, that whether it's grant funding or philanthropic catalytic funding that really incentivizes, I think is one thing. I think looking for different solutions, testing solutions that work, and then looking to replicate. I think a discussion would be warranted as well to say, you covered most of that in your recent reports, but to just say, okay, let's systematically try different things, and having looked at what works and what doesn't work, and then encouraging donors to really fund in this space, as well as getting the private sector to play a greater role.
And Richard, what do you think, Richard?
Sure. So for me, I think the real, the products that we have out there are inpatient products. Only 3% of the population gets hospitalized in any 1 year. We know that, right? We know that from the data that we've collected by working with these microfinance organizations. So 97% of the clients who we sell these insurance products to don't get to use them in a year. So I think that microfinance organizations are very well positioned to roll out, I guess what I would call mHealth, which is, teledoc services, so the ability to consult with a doctor. Doesn't have to be that overwhelming, right? You can have it, you can flip it on its head. So rather than having doctors sitting around waiting to talk to people, you can just provide a service where someone can send a text message saying, please call me back. And then you have doctors who, after they finish their shift at the hospital, if they want to earn some extra money, they come to the microfinance organization, they sit there for 1 hour or 2 hours or 4 hours, however long they want. And they basically call down the list, they call back to people. And so you get a call back within 24 hours. Now, it's not perfect, but it's a lot lower cost than having a doctor sitting around waiting for someone to call in. And so, those kinds of services are really, really valued. That's the feedback we get from customers. They're really valued because you may not want to go to the hospital, but your child really isn't feeling well and they're crying and they're, unwell. And so having someone to speak to is a real benefit, and something which people, microfinance clients are not used to. So I think those are kind of services which, are relatively, they're not easy, but they're relatively low cost, low tech, easy to implement, and they can make a big difference in this space around health.
Are there any examples of, MFIs are still traditionally brick and mortar, right? They have branches, clients go to the branches. Are there any examples of MFIs that have, for example, partnered with community healthcare workers? So when the clients go in to get a loan or pay their interest or whatever, that there would be a simple service that they could have their blood pressure taken or anything like that. To me, it just seems like such an opportunity.
Yeah, there was a great, and Craig's on the call, and Craig would probably know it. He's probably sitting there yelling at the screen. There was, I'm getting old and I can't remember. There was a microfinance network who did this, and they had a band of ladies who went out with various, with bundles of products that were very specifically focused at women. So things like sanitary towels and other kinds of, health-related products, which they sold into those communities. And they also offered health advice, and they also were there if you wanted to sign up for health insurance.
Pakistan, Richard?
Sorry?
Was this Pakistan?
No, I can't remember. I'm getting really old. I thought it was in Jordan or in Egypt or something. I can't quite remember. It was one of the big microfinance networks, and they ran a specific program, and they had a specific name for these people who they recruited, and they were kind of almost like health agents, almost like loan officers, but with a health focus, right?
Yeah.
And I'm sure Craig is sitting there shouting at his screen because I know he'll know who I'm talking about.
Craig, you can put it into the Q&A if you can remember. Then
I think
Craig really should be talking on this, by the way, rather than me. But it's kind of, I think there's a huge amount of institutional knowledge out there in the ILO and in the team that he leads. So yeah. Anyway, sorry, Catherine, back to you.
Is it back to me? Okay, so that was the example that you could think of. And Satara, you look like you're on the edge of, you're on the verge of saying something. No. Okay. Well, so, there's something that, potentially we could, conversations that we could flag and raise the profile of to encourage replication, right? So what I'd like to do now is this wish list. So we spoke a little earlier about let's all act, and but in terms of a call to action from each of you, to the very small group that is here, but hopefully the larger group that will then watch the recording, and especially for echoing on social media. We would be to, what is the call for action that you would like to make to people in the room, to the broader conference, and to our rather large respective Twitter and LinkedIn communities? Let's go ladies first and then Richard.
Honorary lady.
Honorary lady, there you go.
So Sitara, would you like to go first?
No, you go ahead. I'm going to have you go first.
I was just looking at the poll results, and we have 50% nonprofit and 13% investor or impact investor. So my message would be to those on the call, think about something around health and let's experiment, take forward what has already been done. Let's innovate, let's experiment. Now is an opportune time, I think, with COVID. The appetite for things like telemedicine is at an all-time high. So this is an opportune time really to be thinking about how MFIs can get their clients more engaged with health. I could continue with some other messages, but I'll stop there. So Sitara,
I'll build on what you have to say, Lisa. I mean, this is capacity building facility. We do provide grants, and if there is an idea out there, come to us. We'd be more than happy to look at it. And I mean, our applications are online, but we'd be happy to have a discussion with you and see if we can test something. So let's work together to test something out in a couple of countries and see where we go. In terms of the call to action beyond us, I would really like to call on impact investors to push the focus more on health insurance within the MFIs that they invest in. And I would really call to action the private sector, because I really think they have a strong role to play. I've seen the effects of private sector in other types of insurance, and I think it could really benefit the health insurance sector.
Richard.
So for me, I mean, look, microfinance organizations are where microinsurance started. I think someone already made that point. And it's no mistake, because actually, microfinance organizations are trusted by the people in the community. They're already reaching a large number of people. And most importantly, they've got a way of dealing with payments. So they're already collecting money from people, and there's money in the ecosystem in their relationship with the customer. And those are the ingredients that you need in order to be successful in distributing insurance. So at the moment, only a few microfinance organizations are serving their customers with health, which is probably the number one risk that they face through their life. And most of that small subset who are actually dealing with health are only offering it during the period where someone has a loan. And we know that people don't take loans back to back. So microfinance organizations are an amazing platform. They've got all the bits, all the ingredients that are needed: trust, large number of clients, and an ability to process payments. That is all that you need in order to really extend health into these communities. It's a fantastic opportunity to provide a service that people really need, and also to earn money, because if you sell these products into the community, you can earn revenue from doing it. So I think there's a massive opportunity here for the MFIs, and certainly we would love to talk to them, and I know the industry would love to talk. The microinsurance industry would love to talk to the microfinance sector about this, but we do need you to engage with us on it.
Absolutely. So echoing those three calls to action, which are very much build each one on the other. Please do, if you are interested in pursuing this agenda further, get hold of any or all of us. We are actively working at the Microinsurance Network with microfinance networks and MFIs, and actively working on health and wanting to reach the end customers and improve their quality of lives and their resilience. So I think we're out of time. I'd like to say a big thank you to Lisa, Sitara, and Richard for your thoughtfulness, for giving up your time today to share your thoughts. To the people that participated in the session. Please do also look out. I've seen some comments already going out on social media. Please do echo those, because that is a very easy way to act now and raise awareness and draw attention to this particular issue. So we're very happy that this year the theme of the Microfinance Award is around health. And we're excited to find out tomorrow who the winner will be. So do watch participate in the award ceremony tomorrow, and I really hope that can drive this agenda forward. So leveraging microfinance, leverage to bring better health outcomes to microfinance clients in a way that benefits the clients and the microfinance institutions all at the same time. So enjoy the rest of the conference. Thank you very much to everyone, and to the team at e-MFP and my colleague Azier, who did a lot of heavy lifting behind the scenes for this session. Thanks so much.
Thanks, Catherine. Thanks, everyone.
Thank you, Catherine. Thank you, everyone.
Thank you. Bye.
Bye.
Bye.